A couple of minutes until he's here, and then we can get started. Third stream of this week already. If you've been here on Monday at the macro stream, yesterday with the Q&A, streaming today, streaming tomorrow. Quite intensive week, but the market is intensive as well, so always good to have an intensive market and have stuff to discuss. All right, so we got the Jackson Hole event on Friday, so that should be something to cover. And then the FOMC meeting next month. What else do we have? I think this week there's nothing else. We don't have so important data releases. Yeah, so Jerome Powell is speaking on Friday. Next week is interesting. Next week we have GDP data. We have PCE inflation data. That should be important to rate cut projections for September as well. Personally, feel like the market is trying to attribute this sell-off a bit too much towards the Friday event. I don't think that's the case, to be honest. But we'll cover that as well with Rego. Here is. Good morning.
Hello. Good morning.
Hey. Good morning. How you doing?
Not bad, not bad. How are you?
I'm good. I'm good. A bit of a slow day after yesterday's move, but only to be expected, right? When the market moves quite intensively, there's always some consolidation in the market, which may seem boring.
I think it's we've got some decent moves. I mean, I don't like that it's before New York Open, but yeah. Decent moves, but should be expecting a bit more here. It's not necessarily the most optimistic looking thing here, but
what are you referring to?
Oh, just everything in general. Like the response is kind of lackluster so far. Nothing too exciting.
Yeah, interesting how the Bitfinex indicator worked again, right? Always the
yeah,
same.
I mean, they long when price goes down. They distribute when price goes up, and they do nothing when price is chopping. So, and they're still adding to longs here. So,
are they? So is that considered bearish?
Not necessarily, because they also long in an area where they. Yeah, it could be considered bearish. Especially, it's more the premium. It's more the Bitfinex premium that exists, which has been a consistent $200 or $300 above Coinbase, Bybit, Binance since 124K. So that's something to keep in mind. Another thing to keep in mind is just the outperform. Like when alts outperform like this, especially on drops, it's usually not a good. I should say it's not a healthy thing. It's not healthy.
I agree. But that you brought that up, actually. I thought I was the only one thinking that, because I've seen so many comments saying, well, alts are not selling off, they're pretty strong. I mean, you could also argue that nobody bought them because they've been underperforming, so there are less sellers compared to something like ETH. But generally speaking, I don't like it when alts hold and you have something like Bitcoin or Ethereum sell off. It's not the health. I agree with that.
Yeah, it's typically not seen as like the best sign. So I'm keeping an eye on that. But at the end of the day, you're also at like a range low-ish, like or at least if this is a range, this is how it would look.
Sharing the screen, by the way, Rego, because I cannot see you.
I am not sharing the screen. That's crazy. Okay. Here we go.
Right.
I removed my other red line, but yeah, this is like too early to tell. But if you're making a range here, it's gonna look. Where the fuck's my tool? Okay. You're gonna have something look like. I don't think these candles classify. I'll do something like this. You'll have a range between 119, 120-ish till about 113, right? And you have like these lows to defend over here. So if we're in a range, this is likely the most probable area to respond from. But like any range, is usually like large deviations out of it. So like maybe something down towards here and then a quick follow back up. Probably look something like this. If it wants to range, it'll probably look like this. So from like a daily structure, that's what I'm looking at. But again, we've been getting like a lot of these rallies in the last 2 hours before New York Open, and that has not ended the best every single time. Like just following some fractals here, very very similar. ETH as well in a very very strong area. I can't deny that. I mean, like if you could stomach all the way till down till about like 39.29, I think anywhere over here you'll find a level to expect a response off of, but that could be anywhere from 42.60 down to like 39.20, right? So it's a pretty wide gap, but something you should keep your eye on. But yeah, that's the two things I'm looking at the most. I don't like when it outperforms like this because it usually signals overall weakness in the market itself, right? So that's something I'm keeping an eye on. Yeah, and the rest of the market is it's kind of having like these pity bounces for now, and we'll know more in about 20 minutes when real volume returns. But yeah, this is a decent pullback. It's a pullback that if you're expecting some sort of like any sort of response, either new highs or some sort of like bearish retest that goes something like this, you should be seeing it from a level towards 3,900 all the way up to 42.71. So it's rather wide, but that's what we're looking at. But yeah, I think New York Open's going to tell us more. And
I think I mean it's fascinating how fast the sentiment changes, right? It just amazes me every time because we are in a very illiquid market if we compare it to traditional financial markets, right? So moves up and moves down are to be expected, and we had a very very big move in the last few weeks and months, especially on ETH and Bitcoin. And now we're seeing a very usual pullback, very nothing extraordinary to be honest. It's not even a correction yet, right? And the sentiment is turning negative. I mean, it's just surprises me every time. I've been in this market for quite some time, but
yeah,
surprises me every time.
it's because and like I can explain this like a market consists of people, right? And people are traders and people buy and sell on this market. So um, a lot of the sentiment and maybe I'm calling people out here, maybe I'm not. It could be you, it couldn't be you, but it's a majority of people that have just turned the blind eye to the two things that have performed the most, maybe even the top three things that have performed the most, and have tried their luck in other parts of the market where there's, when I say no guarantee, and I mean that like they're stuck in that, and that's where this I can't wait to call the top mentality comes from. It's because they're quite literally trading in a downtrend, right? And the two things that do perform, well, they're expecting like the mindset surrounding this is that they're expecting this to top out or X and Y to top out and for Z to perform. Because if these things top out or if these things do poorly, then that means my asset performs. And that's what I'm understanding is there's a lot of people that have just turned a blind eye to a pairing that's performed as well as Bitcoin. And in these cases, in these days, I would even say Ethereum. Like a lot of people have turned a blind eye to Ethereum. They don't think there's realistically much money to make with it anymore, and it's too expensive. And for that reason, X, Y, and Z is a much better option if these things were to continue performing. So I don't, when you're in for much lower, or when you've had exposure for a while now, you can kind of just see the trend for what it is. But when you're constantly sidelined or you're constantly paying attention to this without skin in the game, or if you only started paying attention to it up here because this is where you were finally convinced to buy, and trust me, there's a lot of people that fall into this because, oh my God, it's the breakout of the 20. Now all of a sudden you're super bearish and you're super worried, right? Because you're at a point in the price data that hasn't been reached in 4 fucking years. And again, like when it's vertical like this, I mean, a pullback has to come. It doesn't just go up forever. It needs to come back. It needs to retest. It needs to fetch liquidity on both sides, right? So again, like, you know, we spoke about this last week, is that the 2021 highs is riddled with bag holders that are exhausted, they're tired, they want out, and they're willing to get out at a slight loss or even break even or even a slight profit at these levels, depending on where they bought in you know, this break above 4K. So that takes a while to kind of, you know, rebalance in terms of old holders and new holders. So a lot of people, you know, and that's why there is such a large sell off, right? There's a lot of people that go, okay, that's it, I'm out. That's it. I'm out. I've held this long enough. I'm getting out break even. I can breathe again, and I can look at the market from a different angle instead of, you know, holding out on it. And then there's, you know, the group of participants that you know, go for the breakout long, and you know, whether it's spot or whether it's leverage, that's going to matter a lot. But there are just as many spot buyers up here as there are leverage buyers, right? And it's just a mindset thing where it's like nobody paid attention to this, and rightfully so, right? For you know, 2 years, 3 years, it's rejected from every significant level that it had known liquidity, and the one time it actually does pump, you think it's for real. So again, it's a mindset thing, right? Where everybody's just so skeptic and so cautious, and really the word is disbelief. They're in disbelief when they see things like this. So again, every time there's a significant pullback, and that's 5 to 10%, and I'll be honest with you, it's nothing. It's nothing in comparison to what we've typically dealt with in the past. But this market in specific, this cycle around in specific, I want to say a lot of participants have been battered so much with the up and down, that they're just ready to call a top on everything, because the majority of their bags will always be in a position where resistance is always around the corner. So when things are performing well and they're in price discovery, and there's like a psychological aspect to it, like a 6-figure price tag on it, they expect, well, this is topped out, it has to stop, right? And the second there is some sort of significant pullback, instead of the mentality of looking at it from this is still a bullish condition, you know, it's a healthy liquidity fetch, it's looked at as, that's got to be the top, you know, just like the rest of my pairing. So that's where this mentality is evolving from. Again, I think the meme culture really ruined the mentality of most participants, where they hold, right, if they believe in something, and they hold if they do believe it has a higher value to obtain. But the meme culture cycle, the meme cycle culture is oh my god, the second there's a 5 to 10 rejection, get out and move on to the next one. So when they see, you know, assets that are being bidded from on an institutional level, they can't conceptualize why it could be seen as a buying opportunity, right? So the top is always being called, and it's always being discussed, and for that reason, I think that's the reason why we keep making new highs, because it's tops are never the common consensus, if that makes sense. It's usually a top is usually met with euphoria. It's met with unrealistic price targets. It's met with overwhelming optimism, where it's just been the complete opposite, right? This entire rally, even into 4K, it's been met with complete disbelief, and complete skepticism. That's the word. So, if you have any thoughts, DB?
Oh man, what should I cover? You mentioned almost everything. I think we can wrap up the stream.
Sorry about that.
We ran out of topics. Yeah, what should I say? I mean, I'm not surprised the market is dropping. There have been a few signals, right? Some signals related to sentiment. I think people started to believe that pullbacks will never happen again. Started to see comments about, you know, no more bear market ever again. You know, there are a few signs, right? We always have the same signals close to a local top. But also on a TA perspective, we've had some higher time frame bearish divergences on BTC as well, and on many other altcoins as well, and indexes. So something that I have been considering for at least 10 days. So not entirely surprised that this has led to a small pullback, and I'm saying small because it is nothing compared to what we've had throughout the cycle, yet at least. But also considering seasonality a bit, September has always been negative, or maybe always is not the right word. If you look at historical data from 1950, the returns on September from the S&P 500 and Nasdaq have, on average, been negative. It is the only month in the year where returns have been negative, and that does influence the crypto market as well, right? We have seen that with a 1.2% drop in the S&P 500 in the last few days, which to me is not yet the pullback that I'm expecting in September. And we've already seen ETF outflows, right? So the performance of the S&P 500 is one-to-one coordinated with the direction of ETF flows, right? We have seen ETF outflows for Bitcoin and Ethereum when we had that little drop a few days ago, a couple of weeks ago for the S&P 500, where ETH retested that 3,400 area. We are seeing some moderate outflows now, nothing extraordinary yet. But what I'm trying to say is that it will be very important to monitor traditional financial markets as well, especially from this cycle, because the coupling has happened, right? The correlation, in my view, has never been stronger to traditional finance. So that's something worth considering. And if we get an actual 3, 4, 5% pullback on the S&P 500, which would be very natural, right? It has been up like 30% up only from April. I think that could accelerate the decline in the crypto market. And again, I'm not calling macro tops here, right? Right? That's not our goal. Our goal is just to understand financial markets, understand what could happen if traditional global markets start pulling back a bit, right? Which is natural. People take profits. As the S&P 500, for instance, has been rising the entire summer, right? So if you're a Wall Street guy and you've been away all summer and you're getting back and you see all your positions in super high profits, it is only natural to take some profits, and that could lead to a further decline in the crypto market as well. I personally don't think that we have bottomed yet. I think we will drop a bit more in the next few days and weeks. How long will it take? That's totally irrelevant, right? We trade levels. We don't trade time. Time is irrelevant, right? It's just that you need to be patient before some of these higher time frame divergences work out. And I think again that the altcoins will suffer the most. I think Bitcoin dominance has been dropping quite a lot. But my biggest problem in this entire move up in the last few weeks has been that Bitcoin has not been doing new highs while Bitcoin dominance has been dropping. If we look at 2021 all season, yes, we did have a significant drop in Bitcoin dominance, but in that time, Bitcoin managed to reach higher and higher levels. Bitcoin was actually in price discovery in 2021 when we had that huge higher time frame correction in Bitcoin dominance, right? So I don't exactly know where Bitcoin was when Bitcoin's dominance started to drop. But I know that a significant move from the 40K area to 69K area, something like that, has happened while Bitcoin dominance has dropped, right? And I think that is what was healthy for the market because we still need a strong Bitcoin. It is the biggest myth that we need a weak Bitcoin for altcoins and ETH to perform. Bitcoin was ranging for quite a bit, right? And that just gave the rest of the market the opportunity to catch up a bit. But it failing to make new highs, at least for now, was never a really big signal, bullish signal for me. And I always consider it a catch up play, right? Eventually, I still think that for a sustainable a move of the entire market, we will need Bitcoin above 125K and at numbers never seen before, right? We now have the scenario where 125K is no longer interesting, just like 70K has been no longer interesting last year. But once Bitcoin started to move towards 80K, 90K, 100K, more retail became interested in the crypto market, right? And that was in the benefit of altcoins and Ethereum as well, right? So I haven't seen that yet. I want to see that to call out the potential what many refer to as alt season or greater performance of the market. I haven't seen that yet. that what to me was missing throughout the last few weeks, and that also is why basically altcoins have not really been performing, right? We did have ETH reach 2021 highs. That had some external reasons, right? All the treasuries buying Ethereum, but altcoins basically have been lagging. And if you look at their higher time frame charts, you see that most of them have just made lower highs in the last few weeks, and altcoins have not been performing since July 22nd. And as I mentioned, the fact that they're outperforming basically everything, even Bitcoin to a certain extent, some of them, to me, it's not really positive. So I personally think that with a September dip in stock markets, where people will start to panic again, right? They always do it because charts stop moving to the upside. I think we could get a bit of a bigger drop in the market, and where that will be, I mean, we will evaluate each level. Of course, for Bitcoin, I think that the 110K area is still very important as the previous all-time high, right? So that's an area of interest, maybe a wick down to 108K, something like that. And then if we have higher time frame acceptance below the previous all-time high area, that's something that to me would be a bit more concerning. But I will approach the market from a day-to-day perspective and level-to-level perspective. So that's my thoughts more or less on the market. Regarding the macro, we have the Jackson Hole event on Friday. To me, I think the market is trying a bit too hard to associate or to link the current drop or the recent drop in the market with that event. We are de-risking ahead of it. I think that's not entirely true. The market needed a de-risking. It needed a pullback because it got a bit overheated. So that's only natural. There's expectations that Powell might be hawkish, right? Powell has always been hawkish, first of all, right? It's just that the market fails to set the right expectations regarding the macro and regarding potential outcomes from the Federal Reserve meetings. Powell has always been, in a sense, hawkish. He's always said we're going to approach each meeting month by month and look at how inflation develops, right? That's always what he's been saying. And now, all of a sudden, while the Federal Reserve may not cut interest rates in September. No, that's not the case, right? There's still a high probability that we will get a rate cut unless numbers are completely missed in the next few days. That has not changed, and given that, I don't personally think that Jackson Hole is the pure reason why we've been dropping in the last few days. Personally. And yeah, as I said, September, I think we'll get a rate cut and nothing changes, but I don't think it will be super important either. Because Bitcoin has been up only for 3 years with high interest rates in the crypto in the US, so I don't think it will make a big difference. So that is where we currently stand. Phew, that was also a very long monologue. Same.
It's better that way. It's better that way. Fuck, I don't even know where to go off of that. That was a lot. That was a lot. I kind of got distracted looking at my own charts here.
Next week we have GDP and PCE. This week we don't have much apart from.
We have the Jackson Hole, right? It's this week, no? Yeah.
On Friday, yeah.
Yeah, just one of those fancy macro bro talks. That's pretty much what it is. I mean, it's considered significant, right? Since most people go off, get off vacation or are going back to their office full time, or so it's like the staple point, right? It's more an indication of like a return to office. That's really what it stands for me. Other than that, it's just as it's the same thing we hear every month, right? It's
yeah, exactly.
But it's really the return to work bell. That's what it is for mostly the financial world. And it's the start of. Is it the start of Q4? Do we consider September the start of Q4?
It's October,
November, December. Yeah, it's October. So it's the warning bell before Q4, right? So.
Yeah. I mean, what new information will be here, right? We will probably not get a confirmation about September, although the market is pricing in or has priced in a rate cut for September, so I doubt it will change. And regarding October, November, December, he'll just say what he always says, right? We will look at data, we will see how inflation develops, and then we will decide at a later stage. So don't see what unexpected could happen, to be honest.
Yeah, it's going to be the same mumbo jumbo. That's what it is.
I don't expect a huge pivot, right? Like December, for example, December 2024, we had a huge pivot because the market was pricing in 5 to 6 rate cuts in 2025. And then in December, Paul basically said, well, that might not be the case. We need to change our approach a bit, right? Because inflation is rising, potential tariffs. That was a huge pivot, right? And that also contributed to the drop in financial markets in December. But now I don't see this event yet being a pivotal event. I don't see how Paul could actually pivot because he has already been quite hawkish, to be honest. And I don't expect him to be even more hawkish, and I don't expect him to just turn full dovish and talk about 50 BPS rate cuts. That wouldn't fit with what he has been saying in the last few weeks.
Yeah, I think we're just gonna hear a lot of the same stuff. Maybe some slight changes because he's got some numbers to go off of. But for the most part, you're not gonna get any answers from the Jackson Hole event. It's as much as a mystery as it is every month, and that's kind of the whole point. It's again, man. That whole Jackson Hole event just feels like a massive like write off. I don't know for everybody involved, where it's just an excuse for them to just gather all together and not actually work. You know, that's what it feels like sometimes, man. I swear, it's like, how many times do we have to go over this? Why do we name it such a big thing? I mean, yeah, so maybe some numbers will come out, some projections will come out, but it's nothing. It's nothing telling, right? Because we know it goes out a month-to-month basis. So what we're hearing this month doesn't matter, for the next 2-3 months. There's no projections that matter in the future because it's about month by month. So it's like the biggest like Jackson Hole events, like the biggest contradiction in recent times. There's just too many moving parts to have any accurate understanding of, any sort of agenda or roadmap or anything that needs to be done. At least that's how I look at it these days. It's like completely meaningless if it's just going to go off of data month by month with no consistency. We got New York Open in about 2 minutes, so it's going to be interesting to see how we finally respond this time around. Do you revert to the CVDD and terminal price charts for anticipating tops and bottom? Not really, no.
No, me neither.
Federal Reserve Bank of Kansas City holds dozens of central banks, policymakers, academics, and economists from around the world at its annual economic policy symposium in Jackson Hole, Wyoming. Oh, okay, you were explaining Jackson. Okay, I was gonna say. I read somewhere that when they have the Jackson Hole event, request for hookers goes up like 300%. Are you surprised? Like, are you surprised? I'm not surprised. Hope I write this understandable. Do you think as the amount of Bitcoin left to mine decreases, the impact of the halving events will likely become less significant? And so, do you guys think the 4-year Bitcoin cycle will change at some point? By the time we're at a point where the halving mines like, I don't know, like 4 BTC a year. It depends what you mean by less mining, because we're probably all dead by the time we're at that point. And by the time we're at that point, assuming Bitcoin's still a thing, which it most likely will be, it'll be so expensive that by then everybody's like, what I'm trying to say is like your landscape, your structure would change so much, like so much. The whole reason why a halving works the way it does is that even if there's only 300 BTC to be mined in a year, that would assume, and that's pretty much what the whole halving is there for, is that 0.00001 BTC is insanely hard to get, and that's the whole thing, right? It's not going to be like one BTC is 100K. It's going to be more like one BTC is like, and you know, like that again. This is way down the line, like 50 years, 60 years down the line. But like one BTC would be like 10 mil. So like mining 0.0001 BTC is a big deal, if that makes sense. So no, the cycle would pretty much always stay the same. Like that's what its purpose is.
I think Bitcoin more follows like global financial cycles, to be honest. So
no. It follows. This is where I disagree. It follows a 4-year cycle, and that's due to its cut in supply. That's what allows it to keep up, right? It's what allows it to find valuation. But it obviously follows the macro side of things, right? But it positions itself to the macro, and it has its own operations.
If global markets go into a bear market, Bitcoin will go into a bear market. And if they go into a bull market, Bitcoin will go into a bull market. End of the discussion. I don't care about the mathematics.
Completely disagree. Completely disagree.
No.
I've been here too long to agree with that.
You will never have a bear market in global financial markets and see Bitcoin go up only. 100% guaranteed. You can have you can have certain short-term periods where it can outperform global markets, but it will follow them. Look at 2022. Why did we have a bear market? Why? It wasn't Luna, it wasn't FTX. Those were the consequences of the bear market, right? But the primary reason of the bear market in 2022 was because in 2021, central banks came together and they said, look, inflation is too high because we printed too much money. So we need to start tightening interest rates, tightening monetary policy by increasing interest rates, by dropping money supply, right? And that led to liquidity in the markets basically getting drained. So we had a liquidity issue. And that led to financial markets like the S&P 500, like the FTSE, like the DAX, like the Chinese stock market, going into a bear market 1 year. And Bitcoin obviously followed that, right? So to me, that is very important. Of course, there are certain mathematical issues, fundamentals that are important and not to be ignored. I agree with you on that. But to me, it will continue to follow global financial cycles. That's the most important aspect of any asset market, not only cryptocurrencies and speculative assets. And especially this cycle, I think it has become even more correlated to global developments with ETFs, with all the institutions being interested in accumulating Bitcoin, a bit less Ethereum. So I think moving forward, we will see this correlation being reflected even more. So this will matter, and whoever says these things don't matter, I'm sorry, man, but that's just not nonsense.
Call it nonsense. Call it whatever you want. I'm telling you for a fact.
I'm not saying you are nonsense. I'm just saying.
I'm just saying it as a actual fact. Like it's an actual fact. The halving is a very, very important event. It's practically the only reason why Bitcoin still remains relevant, and it has nothing to do with the macro side of things. It was actually birthed because of a macro fallout. It was pretty much conceptualized because of this, as a means to protect one from such catastrophes ever again. It's the whole lore around it. It's pretty much the only reason why it exists today. It's because of the 2008 financial crisis. It's just to say, the halving absolutely plays a role. It's what gives it value. It's what makes it neither hard money nor soft money. It adjusts. Yeah, it adjusts to the liquidity that markets are provided. That's essentially what it does.
I understand. And I think that is what makes Bitcoin absolutely one of the best, if not the best asset to hold in the long run, right? Because you get basically rugged if you hold fiat currency because all that money is printed. and the supply of Bitcoin is not infinite, right? It is finite. There's 21 million Bitcoin, and each halving cycle, it will become less lucrative for miners to mine Bitcoin. And that does affect the supply dynamics. I get that. And that's obviously very, very relevant, right? But there's still other mechanisms, other dynamics that are very, very important because you can halve all the mining what do I call them? The mining rewards all you want. If there's no demand for an asset because global markets are in a bear market, it doesn't matter, right? And I stick to that. I think it's very important, and it will be very important.
Yeah, again, it just depends how you look at it. Some will see turmoil in the global side of markets, and we'll start looking at solutions to that, right?
So
In the event
do you actually think that we could, let's say, have the S&P 500 drop 30% within a year and Bitcoin just range or like increase in that time? That's an honest question. Like, do you see that happening in the future?
I think it's only fair to compare when both of them have equal amount of liquidity injected into them, right? When I consider Bitcoin's market cap in comparison to something as big as legacy indexes, then yeah, absolutely. The same way I see gold when it struggles to move an inch. We're I want to say 5 to 10 years away from surpassing gold's market cap, and I'm being dead fucking serious when I say this. So within 5 to 10 years, we could talk where I see, legacies or any sort of tech companies in something like the SPX tank 30%. I'll maybe see Bitcoin drop 5 to 10. Like I just don't think we're there yet. It's so infantile. It's such an infant stage. When I compare to legacy markets that have survived for over 100 years now, and I compare something that's in its first or just about to end its second decade, I think it's fair to assume that give it enough time, and we will absolutely see this. And I'm just, again, it's because it's not just the U.S. stock market I'm talking about, right? And it's not just certain sectors of finance. This would be seen as a world hedge, and that's all I'm trying to say. Like, it's not that I don't disagree that there won't be correlation, right? It's just I will see this more and more where companies that have a reason to be considered to have considered to have lost value, right, over this quarter because of whatever X, Y, and Z crisis has hit the space, right? Sound money with enough time, I don't think we'll have that same sort of impact. And I look at it more, because we love to compare it to gold, right? And I'll just look at it towards gold, where it's like in times of crisis, in times of panic and worry, people kind of lose faith in the legacy side of things and kind of shuffle over to that. So when I have a better solution than gold, I think just with enough time, and again, we're talking about something that in majority parts of the world, that like internet doesn't even exist, right? It's not even accessible by the majority of people on this planet Earth, and that's saying a lot, right? We're in first worlds, right? So we understand the luxury of this, and even into some cases, some third worlds might even have a small population have access to internet in this sense, but we're not even there yet. So eventually, maybe not for now, but eventually, this will absolutely, be a reality. Is that when panic hits, when markets hit the panic button, there will be a time where Bitcoin's not considered that speculative asset it once was. It'll be considered a hard asset, if not already. It's so the market cap is so infant that if 30% of a multi-trillion-dollar industry gets knocked off the table, then yes, absolutely, Bitcoin will suffer. Absolutely. And I'd like to think that for being, I want to say, even more than 10 times less the size of these legacy markets, it still holds its own pretty damn good. And that's where I ended with. It's not that I disagree right now, because right now there's absolutely a correlation. I speak of it all the time. But there will be a day where this misaligns. and that could be in 5 years, it could be in 10 years, it could be in 15 years. I just know it will be like this. But until further notice, I just think it's unfair to compare something that's 1/10 of the lifespan of a legacy market. And the fact that we even compare something as a hedge or as a a beacon of light compared to the US economy or the global economy is a fucking feat in itself. And that's kind of where I stand on this. It's the fact that it's even being compared is insane. The fact that it just climbs and climbs and continues, it already took out the market of silver, just to put into perspective, right? And silver's been around for fuck knows how long. Gold's only a matter of time, and already people see gold as the ultimate hedge, right? The ultimate safe space when things go wrong. So what stops Bitcoin from doing the exact same when it has a fixed supply and a fixed means of measuring every 4 years? I don't think there's much. It's just about, recognition and accessibility, which I think is, it's just something that takes time to get there, but it's getting there. Like that's where I stand on it. It's not that I disagree in the immediate future, but like in the not so distant future, I couldn't disagree more. I think that there will be like a crossroads where we see this happening, and it'll be a snowball effect, right? It's once 1 or 2 or 3 or 4 or 5 people see this, and the next 20 people see it, and the next 50 people see it, and before you know it, there's just not enough to go around. So, it's. But I understand your reasonings. I'm not trying to, it's just from a broader perspective. Yeah.
I understand yours, and I agree. I mean, there's no other asset, a digital asset, of course, that I would hold rather than Bitcoin. Let's say if I was to hold something for the next 10, 20 years, absolutely, it would be Bitcoin. I'm planning to buy Bitcoin next bear market, which will come. There will be a bear market.
There will always be bear markets. I'll never disagree with you, and I'm ready to believe that most bear markets will correlate to global fears, right? And that's just normal. People panic, and if the whole market is coming to an end, and if the whole market's going through a massive bearish drawdown, then I expect Bitcoin to do the same. It's just I expect eventually that it will take the hits so much better, and that in itself will be considered one of its buying positives, right?
You can see that this cycle already, right? I mean, if something like April would have happened in 2021, Bitcoin wouldn't have dropped from 110K to 75K. It would have dropped from 110K to 40 to 50K.
Yeah, it's done extremely well this time around, but still, it still takes massive hits, even if it's considered a safe haven or whatever, or it's becoming to be seen as a safe haven. It still suffers, right? Like any asset in the world, housing markets suffer, everything suffers. Anything perceived with value will suffer. Volatility, doesn't necessarily make something a risk, but volatility is everywhere. People panic, and so long as a market is free, you will always see that in the charts.
Volatility. If you're trading financial markets, you should be prepared for volatility. I mean, look at something like Palantir, for example. In a few days, it has dropped 20%. How is this different to an altcoin, right? And Palantir Technologies is an actual corporation with hundreds of millions in revenues, right? It cannot
Palantir does compared. What?
You know what I mean, yeah, they have like different AI solutions that they're working on right now.
A very speculative industry right now. Yeah.
Yeah. So its increase has also been related to the AI bubble in equities, right? So that has to do with it. But what I'm trying to say, you've had many other assets that have been doing very similar numbers. I mean, before April, Nvidia has also been down 40-50%. So it is a speculative asset. Even stock markets are speculative assets, right? It cannot be compared to something like real estate. Like if you want your money in something that can grow gradually over time, that doesn't fluctuate in price, you buy land or you buy properties, right? You don't trade financial markets. So volatility is very normal, and I do agree that Bitcoin has become a lot more stable, because there has been done a lot of reputational work on Bitcoin this cycle. I mean, you knew about it already, but now more people know about it, Rego, right? That's what I mean. And there's obviously more liquidity. And when an asset has more liquidity surrounding it, of course, it takes more liquidity to move in a more volatile way. So I agree with that. But what I'm only trying to say is that, and I know you agree with this, right? That macro will still matter. And what I'm
Always.
personally what I'm personally looking at, because in the last 3 years, as I mentioned, we've had a lot of central banks pumping money into the markets, right?
Yep.
To fuel their own economies, not because they care about our coins, right? But to fuel their own economies, like China, for example,
Yep.
like the European Union. Today, I've seen a headline about inflation unexpectedly increasing in the UK, for example.
Yep.
And this has not been brought up enough because this per se is not something necessarily concerning because the UK is not a global trading partner. I mean, it is a nice country, a big economy, right? But
It's
when it
not the
comes to
United
global,
States of America. It's not
yeah,
China, for example. Yeah.
exactly. It's not
Yeah.
Japan, it's not the EU as a whole, right?
Yeah.
So what I'm trying to say is that we will look at inflation trends in the next few weeks and months because they will matter. It's not a narrative that's being
For sure.
discussed in crypto Twitter right now, but increasing inflation in other parts of the world will be important because it can mean that central banks will say, okay, we've been easing for 3 years, right? So let's just slow down the pace a bit. They won't fully pivot, right? But they will say,
Yep.
let's slow down the pace a bit, and that could in fact influence global markets. So you've heard it here first. If we have some narratives related to inflation in the next few months, know that Rego and DB brought it up. That's something to pay attention to. What is the market doing? I'm having a few alerts here.
Yeah, it's what we expect. It's a poor New York Open. We rallied before New York Open. It's been typically a bad sign, and we're just doing that, typical rollover that we've been doing upon every New York Open for the past 5 days or so. Past 5 opens have all been the same. We rally into it an hour before, and then we kind of just fall off. And that's pretty much what it is. It's legacy correlation right now. That's what it is.
Look at something like Robinhood, Rego, if you can pull up the chart. Since April, it's been literally up only 295%. Give me one altcoin that did this.
Oh,
Or
well,
give
you
me any.
can't, right? It's
You can, right? So, I mean, if you
oof.
don't have any understanding of macro or the fundamentals of financial markets after such a move, you could expect some form of correction, right? And that is very normal.
Always. Always.
That's an
Corrections are
aftermath.
literally normal. Like the reason why prices go
Exactly.
parabolic in the first place is because it's a misunderstanding of valuation, right? And it's just what markets do. They explode to either side and then they find a mean, right? And that's where these ranges come from. It's a lot of the times it's just that, and that can be met with excitement. That could be met with new discoveries, new developments, new acquisitions, especially in the legacy markets. Legacy markets, there's a bunch of things to consider, right? And some of it could be considered speculation. Some of it could be just considered what its real valuation is, and that's the kind of thing I always wished crypto would have with a lot of these pairings. The proof, like a proof behind why something could be considered valuable or overvalued or undervalued, which is something like Robinhood could have announced explosion of profits, an explosion of user base, or any sort of thing during an earnings call that can give them a reason to assume, okay, the price per stock is considered undervalued and it would be considered more fairly valued at, let's say, $92. But again, a lot of people get late to the news. They hear from their friends, and for some reason they buy above $92, and that creates a chain wave, of excitement and optimism. But the real value is somewhere towards $92, for example. And I'm just throwing arbitrary numbers out here. I'm not actually like telling you. It's just that's what I like about legacy markets and stock markets in general, is because there's got to be a reason for the valuation, and you can determine, even though it's your own understanding of what the price should be. There's a way to determine the value of a security, right? And that could be through who they acquired on their board. That could be who they hired, how many offices they own, what kind of assets they already hold. Like you can make a valuation of what a company's worth based on this. Whereas a speculative market like crypto, it's exactly what it is. It's speculative, right? So a lot of these things don't actually have anything to go off of. It's more anticipation of what it could possibly do in the future. which has its benefits, but a lot of the times it does have its downside, right? So and another thing is when you're dealing in a space like crypto that's as innovative as it is and as early stages as it is, because I'll be around. Altcoins have been around for what, a maximum of 10 years at this point, 1 decade, and every year a new tech comes out, makes the other one obsolete. And that's really where the speculation comes from, is that like the space is constantly evolving. There's no actual set in stone anything, right? And that's the kind of, the sexiness to it, the appeal of it to people. They may not understand markets well, but they do understand this tech and where it could be going. Whereas like legacy is way more by the book, security analysis, value analysis. You know, tune into the shareholder meetings, tune into the board meetings, tune into the earnings reports, and make your assumption on what it's actually worth in that sense, right? So they go based off two entirely different things. But you could speculate just as hard on them. It's just these markets are way more liquid. They're way more liquid, and you're playing with a lot more bigger players. And again, they have a thesis to why something should be valued at this price and considered overvalued at this price and undervalued at a certain point. But to say that they're impervious to corrections and um, parabolic uptrends is just not true, right? It's markets, and markets are made of participants, and participants tend to get ahead of themselves on both sides of the field, right? And for that reason, you have a lot of mispricing, and somewhere beneath it all is the real valuation of it. And that's what I like about legacy markets. I find them boring, if I'm honest, because it's way too much by the book. Whereas speculative markets, ones that are open 24/7 at any moment in time, you could watch someone blow up and lose it all. You could watch someone, make a fortune just because they took that chance, right? Whereas legacy markets is like, if you're not playing by the book, you're not going to do too well, right? And that's it can be considered kind of boring, at least if you're introduced to markets, you know, um, as something as exciting as crypto, right? Or something as new and innovative as crypto. Like when you go to TradFi, you're just like, this is boring. When you go to Forex, you're like, this is boring, all right? So, but yeah, doesn't mean they're not impervious to straight up only trends, right? It's I mean, if we can look at the biggest one that's been talked about for the past 2 years, and that's Mr. Nvidia over here, right? This one, and it's new and it's exciting. It's, oh my god, Nvidia's getting AI, and they hold all the chips, and they could buy out competition, and it's so anything that's speculative, right? AI is considered speculative still at this point in the timeline, right? It's quickly becoming recognized as one of the most essential tools probably since nuclear weapons, right? Um, and for that reason, a lot of money is pouring into it. And when there's a lot of money pouring into it, there's a lot of mispricing of true valuation of certain stocks and what they're actually doing and what they might actually be worth, and not what people think they might be worth in the future, right? And for that reason, you see a lot of these type of moves, right? So I ended with that. I mean, we got about 7 minutes left, so it's our favorite time of the stream, and that's question time. Wouldn't you agree, DB?
Yeah, absolutely. Was just looking at the violent sell-off after New York Open. I mean, violent. You know what I mean?
I mean, it's we're getting a bit of like you said, it's a hedge into the Jackson Hole event. There's no doubt about it. And also just technical pullbacks. I mean, new highs are made. You're probably going to want to show support at its previous all-time highs, and that just makes the most sense. That just makes the most sense. I see Languid has a question here. That's a very speculative question. How do we think the world financial market will look in 10 years if Bitcoin continues to take market share? What will happen to fiat? How will governments react? What will Illuminati think? I think world financial market is in a position where they need to continuously print money, kind of like a Ponzi scheme, to keep everything afloat, right? And again, that's kind of what Bitcoin's designed for. It's what it was pretty much invented for, is to battle this money printing machine, right? It was pretty much the whole reason why it was born in the first place. So for every dollar they continue to pump into the market. You know, Bitcoin on enough of a time frame will reflect that, and that's its safety, that's its hedge, that's its entire purpose is to keep up the inflation and with the continuous printing, which, to my understanding, is inevitable and will need to be done every single time, as every cycle be met with its own crisis, and that crisis will be met with more printing, and that more printing will only accelerate the next crisis. That's how I see it. That's how I see it. That's how I was introduced to it in the first place. It's what made me understand um, money in the first place, right? So 10 years is a lot of time. That would be more than the time I've spent, right? Already in this already, right? 10 years from now, your world can look very, very different. There could be a ton of new things, right? Just look at the advancement of AI over the past 2-3 years and what it's doing today and what it was just being talked about 3-4 years ago. So you know we're at like I like to call it like a renaissance era where we're like just on the breakthrough of some really really crazy shit, right? And that could be in medicine, that could be in technology. We're right there. We're at like the precipice of it, or the cusp of a breakthrough. And the world as you know it in 10 years from now could look completely different. You know, our financial solutions could look completely different. Um, you know, it's so hard to tell how the next 10 years will look like where we're sitting right now, if that makes any sense. Like I don't know if you agree, DB, but like it's we're like at a real like teeter totter
Bro,
stage in the world.
I don't know what I'm having for dinner, to be honest. Could
That's
change
it,
my
right?
mind
That's
four
it.
times. It's very difficult.
That's
But
it.
I mean, what is important and what's the one of the biggest lessons this cycle is that the positioning of crypto and speculative assets, specifically Bitcoin, right? We can argue about the rest. It has improved a lot, man. And of course, I have to say, the current U.S. government plays also a role in it. I would also say the previous one. Yes, you may or may not disagree, but we did get some ETFs, crypto related, but specifically this administration has done a lot, and I think that is very good from a long-term perspective, especially like these laws like the 401k that has been recently implemented by Trump that will have a lot of pension funds getting access towards crypto. These things matter, and the reputational work, it matters from a long-term perspective, and because now Bitcoin is considered something that can be held as an asset for a pension fund. A few years ago, nobody thought that was possible, right? Because if you said to someone, I'm buying Bitcoin, they would say, why would you invest in something that's speculative, right? Rego wouldn't say it because he understands it, but like the ordinary investor, retail investor that is not familiar with the fundamentals of crypto, they wouldn't say it. And it's become way more serious this cycle, right? So the positioning is improving, and that makes the Bitcoin an even more serious candidate for a long-term holding, in my view. And that is the fact. And what will happen in 10 years, it's very difficult to predict, because global markets, they are very dynamic, right? They constantly move, they constantly shift, and it's very difficult to predict today what can happen in 10 years. And after all, it's not information that's necessarily relevant, to be honest, right? Because what do you do with that information if you would understand what happens in 10 years with global markets and with crypto?
Any more questions? We got about 1 more minute. Probably not, but if there's one last one people squeeze out.
What's your thought on this meme coin?
Yeah, I'm expecting when phase 2. Thoughts on go fuck yourself, Inu, and yeah, that's probably the only 2 questions we're gonna get. When moon's another one.
When 250K, Rego? Tell me.
Give it time. Give it time. End of the year.
End of the year. Oof. I'll say.
I'm putting
end
it
of
on the
decade.
line. If I'm wrong, but all signs should suggest
I
250.
appreciate that.
Yeah.
I appreciate that. You have your bias, you stick to it, and it doesn't matter what I say to you. It doesn't matter what other traders say. You stick to your bias, and I'm sure if you have information that makes you suspect it, you would consider adjusting it. I consider you reasonable enough to do that. But I respect that, man. I respect that. I like to joke around here and there, you know that. But I respect your approach.
Yeah, and I respect yours just as much. That's why it's one of my favorite streams of the week. You know,
Yes,
we have a
sir.
difference of opinions and we talk it out, and then find out we're pretty much both saying the same thing on in different terms. That's pretty much what it is most of the time.
All right, I think POC is coming up.
Yeah,
so
yeah.
Probably need to cut
There's
it off.
one more thing I just want to answer. One more thing I just want to answer. What do I think about Sailors? Are gonna implode at some point? I don't think so. I don't think so. And my reasoning for that is the second it's in the hot seat, they'll just buy more. If they're ever in a position get forced out, I think someone buys them out. That's just what it is. That's what I think. I don't think there will ever be a scenario where he is forced to liquidate. He will sooner take an opportunity where someone buys him out or buys out a large part of the market. I'm sorry, there will be an opportunity where someone will buy out a large part of his shares before he ever puts himself in a position to get liquidated. That's my opinion. And that's what I'm gonna stick to. I just think whenever shit gets tough, he'll just promise to buy more. He'll get those funds. If it ever becomes doomsday material, there will be a shark swimming around to pick him up. That's just how I see it. That's just how I see it. I also believe that what he's done has been mathematically accurate. You know, yeah, he continues to offer evaluations of his company to raise more funds. And again, if it was anything else, I would say he has invented a living, breathing Ponzi scheme. And to some extent, maybe this is, but the problem is your Ponzi is a limited supply, and on enough of a time frame. And again, volatility can destroy anybody. I've seen it destroy many people. On a long enough time frame, he'll win. But in the pitfalls that could come, that's where anything could happen. It's a free market, but at the same time, his holding and his stranglehold on the supply itself is a big deal, and I think people underestimate that just a little bit. I think people underestimate that. Do I think treasuries will implode for ETH? Again, it's decentralized until it's not, right? And I leave it with that. Something that's not truly decentralized and something that can be readjusted to be not decentralized is a threat, and it's a risk. You cannot base a sure thing off something that could change from left to right. So again, that's a bit different. That's a bit different. So, but yeah, we're out of time. We're out of time. This one was a bit more of a off the walls stream, if I do say so myself. We didn't really actually. I think we speculated a lot today, DB. I think we had some crazy speculations today, but I'm okay with it. It makes for a fun conversation. I mean, there's not much for us to talk about until Friday and next week, where we'll have a number of things to go over. I'm pretty sure, right?
Yeah.
Yeah, so we had a nice little speculative talk. We compared, legacies to crypto and why they're valued differently and why they're viewed at differently. Spoke on the larger scale, of global markets and Bitcoin being recognized as a hard asset. A ton of things, a ton of productive things. But yeah, next week we'll we'll for sure have more macro stuff to dissect. So we want to thank everybody for joining us today. DB, always a pleasure, my friend.
Nice. Thank you guys. Appreciate the engagement as well in the chat. Always a pleasure to talk to you, Rego, and to the audience. So
Yes.
I'll see you in the next streams.
Yep, and we have Pocky coming up, so don't go anywhere. You know, busy day of streams. Try not to go anywhere. Stick around, and yeah, guys, we'll see you guys same time, same place next week. Take care.
Take care. Cheers.